Good afternoon, everyone, and welcome back. This is Daily Trade Analysis with a quick market update for today, 17th of August, Thursday. Regarding economic data today, initial jobless claims came mostly as expected, 240,000, and continuing jobless claims came a little bit higher than expected. So labor market is continuing showing strength and is as expectations. Regarding Philly Fed, prices paid came higher than expected. New orders came quite higher than expected, from negative 13 to 16, and employment remains in the negative. So all these doesn't change the overall sentiment right now. It's not improving, it's not going worse, it's just stabilizing. And when things don't get worse, sometimes the market just assimilates, digests the information, and provides some consolidation if you have patience. We are going to review that kind of patience because today it's quite an interesting day, because it's one of those days in which you have to really be patient. This is the daily Nasdaq chart. As we were watching yesterday in my videos, I was talking about this blue dot line last week high and the range between that level and this pivot from early July, 26th of June, that we are today tapping. So we broke the ascending support, and we are sliding slowly down. We broke quite heavily in these 2 days last week low, and we are now tapping support at 14,860. If we see the 30-minute chart, that's where I was expecting buyers to come in. So we have this resistance overhead, this resistance, this support that is now resistance. We closed, and then we find ourselves during pre-market trying to go higher. We rejected, and since the open, we've been going lower and lower and lower. But look at this. The bounce from 14,860 already happened. We got nice structure down here, even in the 1-minute chart. So we have this first tap trying to bounce directly. Usually the first bounce is just not confirmation. We have to really take another step, and this kind of structure, let me see if I can draw quick. Oh, come on. Rectangle. This structure was quite good for us to at least have some kind of move to the upside. I'm not expecting to really test high of day today. Today is quite a weak day, and we are just trying to stop the freight train. I'm not expecting the Nasdaq to just reverse and start putting huge green candles. We just want to stop the selling pressure. On the S&Ps, we were today on the cumulative delta minus 13,000 contracts. That's a huge amount of selling. So manage your expectations today, because the Nasdaq is trying right now to be in the green, minus 0.07. The S&P is already in the green. We were quite green today, but we are sliding down, trying to find some amount of buyers. So look at this. This was the moment in which you need to be patient. You need to be patient to find structure. We find ourselves down here bouncing. I usually don't take the first bounce. I want to see some other structure, some bottoming tail, false breakdown, something like that. We got this double top with structure, with building higher lows, and this pivot, we are trying to break that, and we are basically at yesterday's close. So barely flat in both indices. For me, it's quite interesting. It's quite decent to stop the freight train. It's just to stop the red, to stop the bloodbath. And let's take a look to other markets to see if we are at least seeing some buyers in other markets converging with the stock markets. The first one, as always, the dollar. Dollar remains quite strong, putting 0.04 in the red, barely in the red. We are dealing with this structure here that is quite the resistance that we need to clear. And let me tell you, dollar has the keys for the gates of the Nasdaq bulls. Until we see some kind of weakness in the dollar, I mean, there's no way the stock market is going to push with the recent China issues and the Fitch rating issues and the overall fear of recession and higher interest rates. So dollar is in the red, but yields are still in the green. The 2-year, look at this, is continually pushing 5%. Right now, 4.97. And the 10-year is already breaking out June 2008 level at 4.3. This is quite bad. Quite bad. And this is why people don't understand why the stock market is selling off. Well, we are in this situation in which higher interest rates are not still priced in the stock market, but the bonds market, it's already pricing that in. The yields are there, the bonds market are there. High yield corporate bonds are selling off. Treasuries are not there because there's expectancy, there's outlook of higher interest rates. So we are looking towards this level down here. Not this one. Give me a minute. So it's this level at 91. I think there will be huge amount of buyers of treasuries down here. It's a matter of time that yields reach the top, the high end, the terminal rates, and then treasuries will start flying. A lot of people is waiting for that. This is coming, guys. Stock market, it's correcting itself. We are seeing bonds market pricing in the latest push on the high interest rates. Treasuries are setting off finally to really find the real bottom at for 92. And I think it's a matter of time. You really have to be patient right now, not to catch some knives. Just let it bleed. If I expect buyers to come here, at Doji it's decent, but remember that this week is 30-week option expirations. 3 million options are going to expire tomorrow, and I don't expect huge bounce here. I don't expect to reach 14,500. Anything can happen tomorrow. Tomorrow will be quite volatile, I think so. But this range is going to be retested sooner or later. Let's see tomorrow what kind of candle do we get. And then we can start analyzing and digesting that for next week price action. That's for the dollar and for the yields. Regarding banks, mixed sentiment. The regionals are basically a little bit in the green, 0.20. We are still in this 50. Since the SVB failure, we are trying to reclaim. We basically rejected quite heavily here. And we are just drifting lower, drifting below the moving average. JP Morgan and Bank of America are in the red due to Fitch rating possibility of lowering the rating of these banks. That might be the issue. And also Walmart is in the red 2% today because basically it reported earnings saying that online growth fuel, the forecast is not as good as they were expecting. So they were expecting consolidation, but I think Walmart, Target, they are all feeling the pressure of the consumer spending, and this is quite recessionary sign. So let's see what happens finally when all the companies report earnings, but this is a huge candle today for Walmart and a huge rejection on the initial spike up, but then a lot of selling pressure across the board. So coming back to the Nasdaq, look at this. As I was saying, we are holding, trying to push settlement and prayer close. We are flat right now. I don't expect Nasdaq to really push higher days, not pre-market highs, but who knows? Stay tuned. But at least we are holding this bounce, this upper band level of the pivot at 14,860 from 26th of June, the upper level of this consolidation in early June. So let's see what happens. We have two possibilities, not for tomorrow, but for next week. Next week, tomorrow we might see something like this. So holding, that could be bullish towards next week, try to build some momentum higher. Or tomorrow we must just start doing some aggressive, I don't see tomorrow doing this, but if we close below this pivot, so in this case, if we close like this, we are certainly quite seeing some issues for next week, because the next level overhead is just this 14,400, the lower band of consolidation, and there will be a lot of buyers here. I don't want you guys to be trapped here buying this bounce. Wait for confirmation. I think the best option for you is just you to wait for this bottom and to try to catch the Nasdaq and the tech stocks on this bounce. In this bounce will be better. We might see also the lower high continuation on this descending trend line from the high of year at 16,000, but still at least we are seeing some structure down here. Let's see what happens tomorrow. Remember, options expirations tomorrow, it's quite volatile day. Let's see, let's wait, let's be patient, let's assess and see the price action at the levels that they build for the end of the week, and next week we can be better prepared for, if that's the case, to really see some higher prices. Let's see what happens. And I think that's all from my side. As always, thank you for your time. If you find this video useful, please remember to click the like button and subscribe to the channel. To receive notifications when I upload new videos, give it a like, subscribe to the channel. I upload new videos every single day for market forecast, market updates, and market recap. Look at this. This is just a huge curl of the lows with structure, but I don't expect Nasdaq to do a huge recovery today. We have to be patient to see what happens, but manage your expectations, because the amount of selling pressure that I'm seeing, and you for sure are seeing also, it's quite big. So don't get caught on that. Be patient, wait for tomorrow and next week for things to settle, and I'm sure you will have better opportunities if you want to play the long side. So stay safe, everyone. Remember that discipline and risk management are key for success. See you tomorrow, Friday, options expirations.